Welcome back to Cryptolytics, giving you a fresh take on crypto analytics. Today, I'm going to give a brief market update. It's been a little bit of time since I've done one of these. The last time, I guess, was when we were looking overheated on the Aggregated chart. So I'm going to start off there. Let's get straight into it. Okay, so here is the Aggregated chart that I was mentioning before. And here is where I was saying we're overheated and we're looking at a correction. So that was back on the 13th of April. You can go back and look at my videos where I said that. And I was saying that we haven't seen this kind of, these red candles in terms of the stochastic heat map. This is aggregated across multiple exchanges. So even BitMEX, but yeah, Bybit, Binance, OKX, so on and so forth. You can see there's some trades popping in here on the side. On the daily here, just looking at the cumulative volume delta lines here, and the green is representing perpetuals, so that's leverage positions, and then the blue is representing spot positions. So if we look at the cumulative volume delta, what that tells us is that the selling pressure has squashed any of the buying pressure since, well, as far back as we can really see on this chart, to be honest. We'd have some small recovery points at certain stages, but from the CVD alone on the daily, we can see that we've just been in this perpetual sell-off, which when you compare to on-chain sort of, a lot of these on-chain metrics that you see are telling us that people are buying Bitcoin and just accumulating it, I suppose. But at least from the CVD's perspective, that's not really been the case. It's actually been a big sell-off since, I would say, probably around mid-April. You can see both spot and perps selling off. So if we have a look here at the indicators, the blue, sorry, is perps and the green is spot. So there you go. The colors recently switched around, so got those two confused. But anyway, as you can see here, that spot was basically driving this entire move. So if we quickly analyze based on the CVD, like this particular, or this structure, or this price movement, you can see that perps actually drove the majority of this move here while spot was selling off. So it's almost as if the perps were being used in order to push price up so that spot could sell off their positions. That's kind of what this looks like to me, right? So we have spot here, which was just aggressively selling off. Spot is in just, you know, buying and holding sort of deal. And then from here, this was the banking sort of collapse. We could see that spot started to re-enter the market, and then essentially from about 30th of April, so this is sell in May and go away. What does this look like? This looks like sell in May and go away. So I don't know, like, I don't know what to tell you. Anyone who's like sell in May and go away isn't happening. Well, if you look at spot is selling off quite aggressively, whereas perps is also kind of shorting as well. So how this is staying where it is, well, I can't really tell you, but there's obviously enough volume on the opposite side, so on the buying side, to actually stop the price from really going down. But at least from this perspective, I mean, this top call was actually pretty good. And the reason why I called that was because the last time we had red candles like that was all the way back in 2021. So we actually didn't have even have any red candles. This was, yeah, pretty red here. That's pretty red. So this here was, you know, definitely a top on October 19. No doubt about it. We did push a little bit higher, but, you know, we had also CVD divergence as well. So we had a higher low there. So that's another thing that sort of, you know, helps show when stuff like that, these sorts of moves are kind of like fake outs, this last little push to sort of fake everyone out into thinking that we're going higher. And then like lots of longs probably into there, and then, you know, provide liquidity to these massive moves to the downside. So anyway, that's that. Basically, I just wanted to show that the top call was pretty good. So something worth considering in the future as well. You know, if you're ever curious to know if we're overheated, if things are looking like, you know, especially in a bear market. I mean, come on, this is not even the bull market. So if you see this kind of red patch here on the stochastic heat map and dark red candles, this is just a massive red flag, quite literally a red flag. So, because there's your pole and there's your flag, so red flag. And basically that you know, that's pretty strong sort of top call. If we are going to push up further, which, you know, there's a chance that we will, there's still definitely a chance that we will, then, well, I mean, our upside is kind of capped at the moment, at least on the daily, at around 32,000. If you have a look at sort of higher time frames, like weekly and whatnot, then, you know, this is sort of up a lot further, like around 40K at the moment, but then coming down with time. So I guess we'll put this one to bed for now. The main thing I actually really wanted to cover was this. So this is my SAR strategy for Bitcoin on the 3-day chart. I've got two of these. I've got one that's on the 1 day that's a lot more sensitive, so more likely to trigger. And then I got this one that's basically just like, if it triggers, then statistically speaking, it's the time to sort of the market for the most part. So you can see it's pretty late here. Rightio, so as we can see with this, I'm just going to bring up the strategy tester so you can see how this is formed. We're not going to go back all the way to the start. Maybe we will go all the way back to the start of the data. So this is list of trades here. We can see this goes back to 2019. That's looks like, or 2020. That's basically when OKX opened, I would say, because Bitcoin, you know, definitely would have been among the first of the listed assets to trade. So anyway, we're on the OKX chart and the 3-day, and let's have a quick look at the strategy. So what's the success rate of this strategy? About 67%. So about 2/3 of the time, this is correct. This indicator, which is pretty good. Profit factor, that's insane. So anyway, let's have a quick look over and kind of see where we're at, I suppose, with regards to using this to work out, you know, if we should basically sell off our, you know, spot holdings, or, you know, enter shorts, or do anything like this simply based on this indicator alone, without anything else. So we get a lot of kind of like, you know, break evens and really big wins and small losses. It's kind of how this indicator works. Again, this is a 3-day chart. I'll quickly show the settings if you're curious. This is my Cryptolytics SAR trend, which I can leave a link to in the description below for the document that has the code for this if you really want to add it. I did try to publish it, but every time I do, TradingView likes to remove my for whatever reason. So anyway, that doesn't really matter. The settings are here. So start is 0.015, increment 0.01, maximum 0.025. And that's it on the 3-day chart. So very simple. Settings, there's a Parabolic SAR. Normal Parabolic SAR, the only difference is I've kind of like made it look different. I like these strong lines to sort of work out when the position's gonna flip, because otherwise it's just like, well, when's it actually gonna flip? I don't even know. It's kind of cool to know that in advance. So if you've got a stop loss, you can just keep moving it down or up accordingly. So I know this is a little bit messy when I zoom out, so we'll just hide so I can just look at this cleanly and, you know, work out if it's worth giving merit to this. So we can see back in 2020, you know, we flip long, then we broke even for the pandemic crash. So thankfully it got us out, you know, just in time. That was pandemic crash, and then got us back in. So that was a small loss, you know, about 10%, which, you know, might sound like a lot, but then this happened. So it's kind of hard to say that's a big loss when this happens. And then again, we sort of had this sort of break even, sort of small loss again. So gave a little of that back. Well, the market was in decision mode, 2%, you know, that's fine. And then here again. So where are we at this stage? This is the bull market. So it's kind of not relevant. We really do want to look at 2019. So let's just load up the index, shall we? So we can look back at how this performed back then. Though, you know, obviously as time goes on and as more money enters the market, this will change. This will definitely change. Like the accuracy of this will change as more money comes in, because it takes more money to move the price. So let's have a look here. So this is the equivalent of our 2019 pop. So this is like this year equivalent, let's just say. This is like January this year. And then, you know, have this big run up. We didn't have anywhere, like this is a much bigger run up than what we had now. But again, more money in the market, so a lot harder to move price. So yeah, this is kind of our equivalent run here. Now, could we keep going? Possibly. But the macro environment's very different now as well. So still a lot looming over us with regards to, you know, the recession and you know, money printing and all this other stuff, which, you know, is making headlines at the moment. So I won't get into that because I just really want to cover the technical perspective and just this like sort of indicator perspective, I suppose. So now let's just go straight without even worrying about the news and stuff. Where are we now? So we're probably about here, to be honest, I would say. So we've had this run and it's sitting around here. If you have a look, basically this is the SAR line sitting out there, very close. It's very close. Still above the 21 smooth moving average, which is good. So this is the 21 here. I like to use that to work out, you know, if we're above it, then things are bullish. If we're below it, then things are looking bearish. It's not make or break though, because then you have like little fake outs like this and stuff like that. But again, it's just another little point of confluence to sort of support our argument or thesis. So yeah, we're still above here. We started touching it, getting close. Are we touching the 21 smooth moving average? Yeah, we are. Look, we just touched it there, bounced off it for a small recovery, because that is a strong level, right? That's also the 200 period weekly, I would say. It's like simple moving average. It moves faster than a smooth moving average. So yeah, I mean, this is kind of where we are at. We had the first test and then the next test where we fell through. Thankfully though, we did consolidate for long enough after that test. So it's kind of looking like we're doing this now, right? That's kind of like what it looks like to me. So we had a high, lower low, lower high, lower low. I mean, not lower low just yet, because we did come into a support. Then we had a little bounce off there to try and sort of, you know, that's where buying steps in, right? Usually these sort of key levels. And now we're on the brink, right, of retesting the 21 and then also coming into this PSAR. Now, if we're following the PSAR, just what, like, you know, without even questioning it, this actually did pretty well at one point, right? But then, you know, price turned around, did some of this crazy annoying stuff where it just kind of goes one way then the other, classic consolidation sort of stuff. And then we entered the bull market. So will I enter a short when the PSAR flips? Yes. Will I take profit on it as it goes down? Absolutely. Yes. I will probably end up taking like 10% off, chipping away 10% of the position as it goes down more and more. And then as it comes into certain levels, like, you know, Fibonacci's and stuff like that, probably take off a bit more, because something like this could probably happen. But I'm definitely following this. There's no way about it. I'm going to be definitely taking a short out once this flips. And we're pretty close now. The first one to flip will be the other one. There's the faster one, which is different settings, different indicator, but still a Parabolic SAR. It's really like Parabolic SARs on big time frames. But I'm definitely going to be taking a short, because if we do lose these levels, especially like 25, because it's down here at 24, if we do, yeah, people probably say it's still bullish, you know, as long as we don't take out these lows, then it's still bullish above these lows, as long as we don't any like major closes below. But I just think that we're sort of printing the same sort of pattern as 2019, right? We had a look at it. I mean, look at this, you know, just look at this shape here. Now have a look at this shape here. They're very similar, right? They're very similar. So this is something that's worth watching, to be honest, or just seeing how this plays out. But yeah, it's not looking the best right now, to be honest. And, you know, we had that really strong overheated signal on the stochastic heat map on the daily. And yeah, did we quite get to the target? Well, the answer is no, because I actually thought maybe things might push a little bit higher first. But in typical bear market rally scenario, I suppose we sort of hit a wall that we just can't break past, because there's not enough liquidity or not enough volume, not enough money entering the market. And then things either will go sideways for a long time, or we will start to sell off. So we'll definitely have to watch and wait and see. Things aren't looking that bullish. Looking at the daily, we, you know, we've lost the 21 period smooth moving up. So we have our head and shoulders, which, you know, everyone's watching, you know, people talking about there, like, it was getting invalidated. For me, that was a point to sell some more of my Bitcoin. So this profit point here. And I just was like thinking this is probably a bit of a fake out. A little bit of a fake out, and surely enough, you know, we just got pushed straight below it again, back below the trend line for the head and shoulders, and also back below the 21. But we are holding support at the 50, so that's the blue line here. The 50, these are both these are smooth moving averages, just so you know. So they're really slow. They take their time to calculate, so to speak. But I just find that they are good. They do present good levels for support and resistance regardless, and definitely help with bias. So I mean, as long as we're above this red line, you know, as far as the smooth moving averages are concerned, we're still bullish, right? I mean, we entered bullishness back in March. It's pretty slow if you're using this to trade, but this is kind of a confirmation. But as long as we're above the 200 period smooth moving average on the daily, still kind of bullish. But I mean, we lose it at 26k. We lose it at 26k. So a number of days closed below this. That's bearish again from a really like big time frame perspective, right? So I mean, trend is definitely flipped bullish. Looks bullish, but you know, short time frames looking bearish, and those short time frames confirming will lead to, you know, stronger bearish sentiment, really. And honestly, I think going below 25k, people are like, yeah, we have to go to 25k first. Like going below 25k, anywhere below 25k, I believe, and closing down there, you know, you're losing your 21, you're losing your 50, you're losing your 200, you're losing your 100 even, and you know, closing down below there and testing the, and then you're sort of breaking out of this channel here, right? This channel here is just, once it's broken as well, it just doesn't look so bullish right now. So I'm hoping things do pump, to be honest, like, because I'm mostly in spot long positions with a little bit of leverage trading going on. But yeah, I mean, I'll be pulling the pin on my spot once I get this PSAR break. So this is the PSAR on the daily. It's grey line here. It's not as obvious, but yeah, I mean, that one broke out here, down the bottom here at 19k, where I opened my position because I was just really waiting. But yeah, as you can see, this one has fake outs. So big fake out there. It's kind of good that's a bit more sensitive though in some circumstances. But yeah, then you sort of get fake outs and it's not that great. But during consolidative periods, sometimes it's better to have things a bit more sensitive. Whereas in trending periods, it's better to have things sort of take their time to confirm. So let's look at 19, I guess, and compare. There's a lot more sort of little bits and pieces on here. That's just like the 3-line strikes, which, as you can see, were kind of useless to know back here. But anyway, we're just going to keep them on here anyway. So yeah, on the daily, we're sort of getting similar patterns where, you know, we just kind of go parabolic, stay above the 21, stay above the 21, lose the 21, regain it, lose it again, struggle to get it back above it, lose the 50, reclaim it, try to get back above the 21 and lose it. We're doing things like this right now. This is indecision period, right? Very much indecision period. And if we go have a look at where we are now, we can see that we're sort of doing the same thing, you know, lost it, regained it, lost it again, almost lost the 50, regained it, tried to regain the 21, and then it's losing it. So it's doing the same thing. Like, it's literally doing the same thing. Like, comparing to 2019, it's like, when it comes to fractals and, you know, bar overlays and all this sort of stuff, like, come on. The proof's in the pudding, right? It looks very close. It looks very close. So anyway, what am I doing right now? I guess just watching and waiting and seeing. So yeah, it's a very slow grind to wait for confirmation. At the moment on lower time frames, the bulls and bears are at fighting to keep certain levels. So, you know, bulls will be trying to defend these levels here, bears will be trying to defend these levels here. So it depends on your perspective. Let's have a quick look here at the liquidity chart. So this here shows stochastic heat map on the 1 hour for Bitcoin. And we're having a look at seeing where pockets of liquidity are and where reversal points are. So we've got a big one here. This pocket here was very strong because there's 2 there. So we're here and here. So in terms of liquidity, there's about 3,000 Bitcoin worth of liquidity here, and that's on perps for Binance. You can see that got hunted like, you know, like clockwork, basically. Just got hunted right here, tore right through it as a stop loss hunt or a liquidation hunt, and then just went straight down to take out these levels here. So now that that liquidity pocket has been taken up, and this one has now 2, let's have a look and see where the closest liquidity sort of pockets are and the size of the liquidity. There's like nothing above. There's stuff all the way up here at 30k. That's going to take a lot of volume to push up to there. But there's a lot here, up around 30k. There's a lot of volume here. A lot of potential positions, a lot of liquidity. We have a fair bit below, a lot closer to price, right? So this is about 4% from price, and this is about, let's see, 10% of price. So in terms of liquidity, you know, where we're most likely to gravitate towards, I'd say the closest, most likely. And the closest is down here at 25k here, which is, you know, the level everyone's calling for. So that is the closest point of liquidity. I mean, that's just the long and short of it. So make of that what you will. But it just seems like it's going to be sort of the most likely point that price will actually gravitate towards. So that's pretty much that for the liquidity chart. Or I could go into this a little bit more, like with this chart here, which is showing the liquidation levels. But they constantly add more all the time. One thing I did see is a red flag here, and I was going to do a video when I saw this, but I had trouble with my recording software. So I saw this, so these big red candles here on the stochastic heat map, plus all this very heavy buying. This to me is the sign that you're going to get trap traders, trapped longs here, because we're in a ranging market and we get this kind of aggressive buy volume here. So again, this was Monday last week. When you get this kind of aggressive buy volume here, straight into a liquidity zone. You can see that's a liquidity zone, which is just all this printed liquidity from all of these positions, look at all this, these crazy positions here. This created a massive liquidity zone here, huge pocket that was most likely going to get hunted. People were just buying, buying, buying. And that could have also been shorts closing as well, which also is buying as well. Which is highly likely that was the case. But when you see this sort of string of big green dots in a consolidation or as like a range, then that's a big red flag. Red candles, eating up all the liquidity, got most of it really. And then turned around on Twitter, I did say, I did post this chart. I said most of the liquidity's been eaten up. I posted this and was just like, yeah, I think we're going to go down from here. So you can have a look at my Twitter for that and look what happened. So this is why being able to read liquidity is really powerful. It's very powerful. Also, we smashed through the SMA VWAP bands as well. So here's your mean reversion and then just failure to push back even higher. And then, you know, that's basically a good short there. Did I take that short? Yep. I took it around here. So I was a bit late to the party, to be honest. I took it around here and been sitting in it since. I do want to open a long though. That's pretty much that. So that's pretty much just like a quick update. Just a couple of charts. Just didn't want to overload too much. Just a nice quick update to sort of see what I'm looking for. I want to take this short. I'm waiting for it. I feel like it's only a few days away now, really. But I'm definitely going to take this. So once 21's lost, PSAR's flipped. It's all the way down here at 24 though. You know, people say the low's already in, right? And, you know, I kind of see it too. I kind of see it too in some charts. Like my cycles chart, for example, you know, where I was saying that I reckon we'll probably get to about the risk index, the potential top for the risk index was about here. Didn't quite get there. We got close. We did get close, but I was just saying, you know, in a video from, it was probably the start of the year, maybe January or something like this. I was talking about the liquidity. Oh no, it's just, I was talking about the undervalued zone, right? And this is in the risk index, how it's creating this bullish divergence. And then if that happens, this was in November after the FTX collapse. I said, if this happens, then, you know, we've found a bottom, because historically that's where bottoms are, like where we get these divergences on the risk index. And that's exactly what happened. And what made me think that we'd get to this part of the risk index? Well, in 2019, this was the risk index, right? So this is July 2019, you know, this is where we hit before coming back down into the undervalued zone. So, I mean, look at this. Kind of, it's actually pushing higher a little. Surprise. Let's have a look at price. Yeah, we're pushing higher. Very interesting on the risk index, pushing higher versus price, because that's not really a divergence. I mean, it's a divergence, but what does that come under? It's not a. It would be hidden if anything, but you know, hidden bullish divergence would be from the other side. It's measuring the lows, not the highs. So yeah, I don't know what to make of this, but I was thinking maybe we'd get a little bit higher first, but we did not. And again, it had target around 40,000, but it's just looking kind of like we're losing that. But things still look, you know, actually kind of bullish from this perspective, because we haven't lost the bull market support band or anything yet. But you know, if we look at the regression lines, which, you know, worked pretty well here, that was kind of a bottom there. The bottom of the regression lines are sitting at around 22,000. So what's that from here? It's about 17% really. And I think the breakout point was here for the PSAR. So yeah, I mean, 10%, 14%, whatever, that'll be pretty solid. Be happy with that. If this is actually where we go to. I do like the pi cycle bottom, still kind of came pretty close to the bottom. And also this level here, which is the Elliott wave theory, ABC corrective Fibonacci extension prediction for the next support for a drop. And that's measured from, so this was measured from here to here to here. And then that's where it plotted the potential bottom for that move, because we just consolidated here. We're in a consolidative range. This is trending. It's really good to measure trending moves with this sort of thing, but this is ranging. Look at this. The range starts from here. The range started in June 2022, because we hit the bottom here, then we tried to climb back up, you know, rejected from some of these levels like this from here, this low here. Massive rejection. It was kind of front run, quite get there, got very close. It was front run, and then we had a deviation here below the range, and then again top of the range here. This could potentially be a deviation above the range, and then we could be coming back into the range here. But if we keep ranging here, I don't know what's the deal with this. These regression lines are bending out to the side. I'm not really sure if that's meant to be doing that. Never seen it do that before, but maybe things are changing, so the indicator's changing with it. Interesting. But the regression lines, I mean, if it did come back down here to the bottom of the range at like 18, 19, kind of wrecks the regression lines, and they would need to be curve fit once again, once we work out where we are. So I'm going to quickly check the old DXY, an old fan favorite among technical analysts to look at. And we're still in a downtrend really when we look on the daily, but we are getting a relief rally here, right? This is interesting because the US is probably about to start printing again aggressively. So, you know, it's kind of weird that it's going up, but here we go. DXY is pushing, and long and short, it's very bad for risk assets, Bitcoin being very much a risk asset. So it's not really a good sign. Let's have a look on the small time frame, right? And see what we're looking at here. Yeah, so we've definitely got a small uptrend going. Let's go 12 hour. 12 hours, not quite changed direction yet, but 4 hours certainly. And we're in a range on the 8 hour. I kind of like this, to be honest, because that's kind of what we're looking at right now. We are kind of in a range with the DXY, you know, bottoms, it's touching multiple times. I think I would say though, if it tests this bottom again, I don't think we'll get like a triple bottom. I think that DXY will start to fall through. So it's kind of pushing up now, right? And this could be a double bottom pattern, but it wouldn't confirm until holds above here. Double bottom it needs to sort of break above 105 and hold above there to confirm a double bottom. So, but that could be playing out. And then who knows what the target is. DXY is not really per se. So this is just sort of giving an idea as to what the market could do. And people are de-risking. And that kind of shows here as well with the CBD coming into this aggressive drawdown period. You know, this looks like de-risking, big like shorting, you know, essentially. And the DXY kind of supports that people are de-risking. Now, again, this is like coming out of many assets. So NVIDIA, Google, whatever, Tesla, all that sort of stuff. So these are all your risk assets. Although NVIDIA is like very strong at the moment, but I won't look at equities right now. I don't actually cover equity, but you know, it's a good idea to look at equities anyway for diversification. But I only cover crypto because my name's Cryptolytics and it's not Equitylytics. That's hard to say. That'd be an interesting channel name because no one would be able to pronounce it. Anyway, so I think that covers it. I just wanted to give a quick market update, show you what I'm looking for, what I'm looking at. I really want to take this short, but I will not take it until I get confirmation because we're still bullish above the 21 on the 3-day, to be honest. But there's just a lot of signs of weakness and a lot of patterns that are sort of playing out akin to 2019 that make me think that it's definitely worth considering flipping back to bearish. But I've been relatively bullish this period because I did catch the move. I think the people who remained bearish were the ones who missed the move. So I caught the move. So I guess I'm pretty bullish, but I can flip on a dime, right? And that's what you need to be. You need to have your tap dancing shoes on, as they say. And yeah, change your bias when is necessary. Otherwise, you'll just be left holding the bag, which is fine. In a long term, like if you're talking multi-year timeframes, it's all well and good. But you know, if you can time this sort of stuff, then you can definitely outperform spot and DCA. So even my DCAs that I've been performing through this period are absolutely getting wrecked right now. So versus my trading, it just kind of goes to show for me that I don't really I don't mind DCA. It's cool, but it's you know, it's kind of stress-free, but it's kind of dragging down my trading account and making it look like my trading's bad, but my trading's not that bad. It's just all the spot that I've been buying is dragging my account balance down. I mean, I have one last little piece of alpha here before I leave, and this is a gift to those who stuck around with me till the end. So yeah, thanks for that. I am going to cover this PSAR strategy for Bonk and where you can trade this. Now, I was in the process of doing a video for this, and it was all about meme coins and how to trade them. But unfortunately, I had some pretty major issues. That's one of the reasons why I haven't recorded a video in a while. But I'm just going to work through them with this video. So this might be a little bit delayed, this information, because I'm going to have to fix stuff after I'm done recording this. But anyway, so this is a PSAR strategy for Bonk. Now, Bonk is a meme coin. Again, I think meme coin season's kind of dying now, I feel like. And I've got the same settings for Pepe as well. And Pepe have got even automated, and I really want to cover how to automate my trading strategies in a future video. But for now, I'm just going to show these manually and I'm going to show you the settings. So this is Bonk 2-hour chart. I'm using the BitGet chart for Bonk, but I'm actually trading it on Drift. So this is Drift. This is a perps exchange for Solana. Very small position, as you can see. It's only like $500 position. Very small account because I had, you know, money in Mango and a lot of money in Mango. And I almost lost that, so I'm scared to put anything more than this sort of pathetic amount into these exchanges, but I figure why not use them anyway. So let's have a quick look at this strategy. It's done very well for me. It's up 60 bucks, whatever, who cares, big whoop. But it's been consistent. Like, it's just been win, 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 win. Small loss, win, win, win. So let's have a quick look at the Bonk settings. So again, Cryptolytics PSAR, link in description for the code on the indicator. Starts 0.02, increments 0.01, maximum 0.015. This is this is the bot for my PSAR. So this is the bot indicator. Has also a DMI modifier and as you stop loss, but this is not a bot. This is manual. You can't bot trade on a decentralized perps exchange. So these are the settings here, and let's have a look at the back test. Beautiful. 6 profit factor, absolutely amazing. 70% win rate, just incredible, and it's just crushed it with this. Let's just see, what is this? The $600 position size. So since they're using this, which was pretty much at the start of my ability to use it, it's maybe about 1,500 bucks, 1,600 bucks, less than that because I'm using $500 position sizes. A quick look at the list of trades. You know, up at the moment it says 69 because it says 5 less, because otherwise I'm giving a false representation. I did put a little bit extra money in Drift because at the moment they've got a liquidity boost for adding MSOL, and I got quite a bit of MSOL. Also, the commission on Drift is not that high, so it's about 0.05%. Very nice versus, you know, OKX spike is about 0.2% for trading commission, whereas this is very much lower. This and like say Pi and X are about 0.05, so they're really nice for market orders. You can just slap them in there and not have to worry too much about fees. So yeah, that's accurate. 58, 59. Yep. So we're right. So let's have a quick look. Overview again, same deal. Really nice. Just kind of up only. So we had a couple of losses. You know, you're gonna have drawdown periods. You're gonna have losses. So yeah, let's have a look. This long position was absolutely phenomenal. Just like because the thing about meme coins, right? And I'll just quickly cover this. Meme coins, because they're kind of traded by retail. So retail will sell when there's a trend of sell-off period, and they'll just buy when there's a trend of buying. So that's why you get these weird sort of kind of up only and then down only periods. That's why I love this PSAR, these PSAR settings for meme coins, and I've got it for Pepe as well. But you can see, you know, kind of annoying here. This big short here, which was, let's see, let's have a look at the most impressive of the moves. This one, look, trade 13. That's this one here. So April 19, definitely took this short. Absolutely phenomenal. It's 200 bucks. Sweet, you know, pretty nice. Next trade here. Wait, that was this one. Sorry. Yeah, this one here, because I clicked on the end of that trade, not the start of it. So here, so caught this, really nice. Caught this, caught them all, to be honest, because you actually also have time as well to get in a lot of the time. So here it flipped, and then you could get in over the course of the next few hours. Same deal here. Kind of this one kind of took off, and if you missed this latest one here, this latest long, we kind of like missed the entire move and have to wait for the short signal. But anyway, that's the settings for the PSAR for Bonk. It's incredible. If you want to trade on Drift, if you're a Solana user such like myself, then I can post a referral link below. And, you know, they've got referral sort of bonuses going at the moment, which is really cool. But I'll pop that below, and I'm going to be taking the Bitcoin short here. And I'm going to take it in OKX as well, probably. Most likely here, though, I'll just probably go and just kind of max short 10x. I already closed this. I had a long in since all the way back here, but I actually closed it on the red candles, and I've just been waiting for the next position. So this is really, really nice, a really nice perps exchange. You can only use Solana and USDC as collateral, which is a bit of a shame, versus Mango, which can use an entire basket of assets, all of these. Again, just got a small amount in here as well. I couldn't justify putting any more than like 500 bucks in Mango after, like, you know, the last massive thing that went down. I got a video to that, which you can find on my channel, about the exploit. Really can't justify putting more than a couple $100 in here. But sitting in no positions here, so probably go short on Bitcoin here as well. And using the, I've got spot Bitcoin here as well, which I'll probably end up selling, and then rebuy back lower. So yeah, these are your Solana exchanges. And it's looking like things are selling off as I make this video. So yeah, I better watch the market and see what I need to do. Bonkers in this short, pretty small position, obviously. I mean, I could degen and open up 4x, but I just really don't want to do that because it's a meme coin. You never know what's going to happen. I'm just moving my stop loss down with the PSAR. That's kind of how you do this stuff. You just have your stop loss in, move it down. That way, you know, if the price does rip past, then you're safe if you're asleep, for example. But that's that. That's the settings for this, and it works on Pepe as well. Let's have a quick look at Pepe. So this is the long and short that I took on Pepe, and this is all the positions. I've only put the positions in for these ones, and I just kind of stopped and just like letting the bot do its thing. Right now, this is a bot on Pinex that I'm running. And, you know, since I'm not an influencer, I can't share it so you can copy it. That would be great, just so, you know, that way I could help you guys out. But unfortunately, they don't just allow anyone to publish scripts for them. So, you know, I'm not important enough, clearly. So yeah, anyway, so I got this, let's have a look at the strategy tester overview. Beautiful. 66% win rate, maybe about $1,000. And that's pretty much it. So, you know, same settings, and that's just running and doing its thing. Right now it's in a short, so trades currently right now it's up about 19%. There was a $20 loss there, but as you can see, who cares? Look at this. And that's a good thing about meme coins. When they enter these trends, they just trend for a long time, and they do consolidate a little bit, but compared to normal crypto that consolidates and does stop loss hunts and wicks people out and just really can be quite annoying to trade. These just enter these really strong trending periods, especially the sell-off periods. And being able to short meme coins is quite possibly like the greatest thing. So yeah, so I'm in the short right now. That's just doing its thing, printing away. And yeah, sitting pretty happy with this. Again, small positions, don't really want to bet the farm on meme coins. $600 position size. That's currently, I think, at a 5x that I'm trading. So, and I've got that on an isolated. That's an isolated, usually I use cross for trading, but I've isolated this one. So if something goes wrong, then if it liquidates, it's going to liquidate a very small percentage of my capital, and it's isolated to just this trade. So quite like isolated for this sort of thing for meme coins, just so you protect the rest of your capital, because the last thing you want is for a meme coin to wreck your entire account balance just because you accidentally did something wrong. So yeah, I like isolated for this sort of thing. Yes, you can liquidate, but it only takes out the percentage of capital that you really gave to that particular trade. So anyway, I think that's enough. That's pretty much wraps it up. What's my sentiment? I don't know. We really need to wait for confirmation before I can give you that. But yeah, here's some alpha. Shorting and longing meme coins. Quite possibly one of the greatest things ever. And yeah, I guess this is just still sort of coming down. Everything's sort of coming down. We're still holding decent levels, but things aren't looking that great. From the perspective of the bulls, we're sort of kind of just playing out 2019 again, and we're sitting here in this position. And I really do think if we lose this and lose this, you know, we're probably coming down even further, maybe to 20K again. If you think the low's in, great, no worries. Then 20K is probably your target. If you don't think the low's in, then I reckon the 618 is the target, which is about 11,000. Between 12,000, anywhere between, I think, 10,000 and 14,000, let's be honest. Like, we can't give specifics. There's a lot down there, but yeah, I mean, if we do hit this 618, then we're coming down even further. But yeah, I mean, this level was really strong as a bottom anyway, because look, if we have a look at all of these Fibonacci extensions measuring certain moves, here, that was the target, here, that was the target, and what was the last one? Here to here, that was the target. This entire cluster here, strong support, because we have all of these here and the 0.5. So as far as this was for a bottom signal, again, like I measured this last year. So this has been sitting on this chart for quite a while now, half a year, right? So I knew this was a strong support zone based on all of this as I was measuring it. I was measuring as we were getting this stuff, strong support. So is this a strong bottom? Yeah, sure. Absolutely. I think it's a strong bottom. Could we break it? Absolutely. 100% possible. We don't really know what's going to happen. We are in very sort of shaky territory with regards to the macro environment. We don't have liquidity flowing in like we did in the past. The Fed's going to start printing again. So, you know, does that translate to liquidity? Maybe so. And I guess the other thing as well, people talking about the Asia pump and all that sort of stuff. I recommend checking out the channel called Box Mining. So Box Mining is based in Hong Kong. I've been following them since 2017. Now, Box Mining made a really good video on the China narrative for trading. I really recommend you go watch that because that's really going to give you a big perspective. Well before like Crypto Banter and all these other guys started flipping bearish on the China narrative, Box Mining did it first, right? So if you want to know what's going on in Hong Kong, watch them because they literally know what's going on in Asia and appealing to a Western audience. So they speak English and everything like that. So go watch Box Mining if you really want to know what's going on with the Hong Kong narrative, the China narrative. And that's just my recommendation. Obviously, it's not financial advice. Nothing in this video is financial advice. But if you really want the alpha in there, it's better to get that information from the people that are there, right? Obviously, you got the Koreans and Japanese who are a separate market again, and there's quite a bit of liquidity in the Japanese market and some liquidity in the Korean market, which could still pump things further. But that's just one thing I thought I would quickly mention because, as I've probably mentioned before, been in Asia for a very long time, and so yeah, I sort of kind of know who to watch with regards to that sort of stuff. So anyway, that's the video. Hope you liked it and hope you learned something. Please, if you liked it, give the video a like and feel free to subscribe to the channel and hit that notification bell for more content like this. So you can see you will not get spammed by me because I haven't been making as many videos lately just because there hasn't been really much to tell, right? So especially from a longer term perspective, called the top, but I'm not quite calling the bottom just yet. So yeah, let's just see how things play out. So yeah. Keep safe out there. This is Cryptolytics signing out. Have a good one.